What's going on, your average investor? Today we're going to be looking at Micron and why it actually popped after earnings and what it means for the overall semiconductor or chip market. As always, we ask you to subscribe, help us monetize the channel. We've done giveaways in the past where we give our subscribers some fun money so that they can go and average invest themselves. But turn the notifications on and make sure that you are subscribed so that you can get the latest and greatest from us. So looking at Micron, interesting, it surged 17% before the bell on Thursday after the chip maker forecast higher than expected earnings. So we actually do get some truth for once in our life where an earnings report produces a higher or a surge in a stock. Company execs attributed the raised guidance to a more favorable pricing environment as well as a more robust demand for Micron's memory chips. So a few different things about Micron. Micron's been around for quite some time. They, in the consumer products, do the whole ballistic line of memory modules. They're marketed under the Crucial brand. And Micron and Intel together back, I think it was 2015, 2016, they created this whole IM flash technology, which then produced the whole flash memory. So pretty large company. They've been around for about 45 years, publicly traded on NASDAQ the entire time, moved into the S&P components. And the nice thing about these guys is I think they have like a 40,000 or 44,000 number of employees as of 2023. So pretty large company. So recently, Jim Cramer, kiss of death, he discussed that the two separate states of the economy is completely separate. You have one economy struggling with the high interest rates. You have another one where double rate cut stock market, including the Dow, S&P, and NASDAQ, are experiencing declines from this. And so what that means for a lot of people is they will start seeing growth in some of these larger consistent, whereas the smaller caps are going to just get crushed by the increase of the interest rate. And as he described this, he was highlighting that several companies that retailers and restaurants serving the whole low-income customer field, they may be worried about this. However, tech sector in Silicon Valley will remain largely unaffected. You know, tech leaders, these guys have escaped the constraints of interest rates because they focus on innovation and they cater to businesses rather than to consumers. So as consumers continue to get crushed in things like retail, food, chains, tech giants, Meta, Micron, for example, they seem to do fairly well during this environment. So looking more at this, they have been talking quite a bit about this advent of AI. They're getting more and more into the AI component, just as everybody else is during this buzz feed. But as AI needs and demands go up, chip makers should continue to see increase on this. You know, post earnings beat and raise reports, these guys are looking pretty good from a overall standpoint. The earning of shares 1.1 on a sale of 7.65 billion. So in the earlier period, Micron lost an adjusted $1.07 per share and an equivalent of 4 billion. Current quarter, these guys have done a great job. So looking overall at how these guys are playing after it, most in 13 years, pretty big surge. AI is really just playing a lot into this for these guys. And when all is said and done, I think personally that these guys, with the continuity of the AI craze, will drive share prices of these chips up as the demand is there. Now, again, this isn't investment advice. This is just simply opinion about what we are seeing in the marketplace. But with 2025 around the corner and a lot of companies such as Meta, such as AMD, such as NVDA making these giant chip processing plants and centers to continue the AI craze, we should see consistent demands needed, which then should further stock price. Let us know what you think in the comments. Are you going to buy this one? I'm not sure.